Good morning, guys. Quick little trade review here today on Twitter. Pretty nice trade this morning. So, as always, guys, we'll start with the big picture, which you should have had an awareness of heading into today's session. Pretty quiet Monday yesterday for the market, guys, and pretty quiet again today. So, that was kind of my first note that, heading into the session, we weren't, coming off an incredibly strong Monday, and pretty evident this morning, guys, that you can just see the 65-minute chart here, bone dry volume, that we're not having a very strong day here today either. So very quickly in the morning, able to make the conclusion that for the time being, and that's what you need to focus on, market's not very strong. Q's in a little squeeze kind of thing right here, no volume. So not a very strong market, guys. So what ended up happening this morning was you basically had what I call lone wolves, two stocks moving kind of independently of the market. There's Tesla, fuck you, and now we're going to move on to Twitter. Plain and simple, guys. Same kind of structure to all of my trades. See the money, follow the money. Simple as that. So take a look here at the 65-minute chart for Twitter, and you can see, big volume day, and it's made a nice move. Now, before I take any trade, guys, always see the big picture of that stock as well. Big picture for Twitter is that we're pretty extended here, and the big volume that kind of started this move has dried out. So this looks like it could be the kind of the final day of, kind of like this gas out, one more final push to the upside, before this move kind of, dies out and profits are taken. So we'll come over here to the chart I was working on this morning, guys, 5-minute chart. And again, this morning, incredibly strong volume on Twitter at the open on the first 5-minute bar. Incredibly strong volume once again on the second bar. Now, typically, guys, I don't trade typically in the first 5-10 minutes, but when you see this kind of strength, and again, I flipped to the daily chart, had the awareness that this looked like a final kind of a exhaustion move. One more final push to the upside before things die out. So I like that going into it, knowing that I could probably quickly scalp this and get a nice piece. So this morning at 9:34, I took my entry when this bar dipped at 9:34, and then very shortly after, guys, at 9:40, I took my position off right about here, and that was a 20% profit on a little over $4,000. So it was an $840 profit in 6 minutes. I'm sorry, I think it was 4 minutes. It was 9:36 to 9:40 or something along those lines. So let's break down the trade, guys. Why did I take an entry? Super strong volume, and I caught the initial dip. Why did I go into this trade knowing it was going to likely be a day trade? Big picture of the market, extended, I'm sorry, not extended, big picture of the market, not much strength, pretty quiet, very low volume. Understanding Twitter and Tesla, kind of the two strongest names by far today, that's big picture of the market. Big picture for this trade itself, chart is pretty extended, volume has dried up, despite this morning's push, looked like the kind of the last day. So that was what dictated this being a day trade, guys. I didn't have that kind of confirmation across the board that, this thing was going to swing higher. Twitter itself looks extended, and the market was not strong. Technology is not, making a crazy move today. This was clearly not a group move. And for me, if it's not a group move, I like to simply take my piece, and call it a day and move on to something else, or, go focus on something else. So 4 or 5 minutes, a little over $800 of profit, 20% return. And one thing I've been working on my mentor with as of late, guys, is kind of using some intraday indicators. I'm not a big indicator trader, but him and I have been discussing that there are a lot of indicators that we could potentially utilize that kind of track at the heart of them the same things that I myself and many of us focus on as a group, which is kind of supply and demand. So where indicators can begin to get useful, and I'm starting to learn, is when you can use an indicator that kind of can determine a level in a stock where a supply and demand situation is going to shift, where a move may go from strength to more so profit taking. And one indicator we've been using lately, guys, on these 5-minute charts is this green. Like, ignore all these lines. They mean various things to him and I, but this green line right here on our 5-minute chart is called the average true range. That green line right there is 100% of Twitter's average true range. And to break it down in plain English, which Investopedia always does so well. All right, average true range. The ATR is a measure of volatility introduced by Wells, blah, blah, blah. The true range indicator is the greatest of the following, stats. Current high minus the current low, and the absolute value of the current high less the previous close, and blah, 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 blah. In plain English, guys, it can be used for stocks and indexes, and simply put, a stock experiencing a high level of volatility has a higher ATR, and a lower volatility stock has a lower ATR. The ATR may be used by market technicians to enter and exit trades and is a useful tool to a trading system. In plain English, guys, what the hell that really all means is that, average true range is kind of a way to measure, what is the likely, the biggest move that this stock would make. On average in the last, 10, 15 days, kind of, it's taking all different kinds of statistics into account. And, where is this stock most likely to kind of, have made its biggest move and stop for the day. And, what we're focusing on is, 100% of its average true range. And that's what that green line is. So, very simple, guys. I took this trade this morning and knew exactly where I was going to be looking to take profits. Took them off immediately. It dipped there, and though it's kind of screwing around now, it's pretty much where I was when I took my exit. And using that average true range was helpful. So again, in plain English, guys, average true range, which I think it's probably an indicator you can use on a lot of different platforms. It allows you to kind of pinpoint price levels on the chart that are more than likely to be levels where a move may stop and profit taking may begin to take place. Kind of a measure of when is a stock kind of blown its full load, if you want to put it that way. So once again, guys, simple structure today, and my last few trades have kind of all been like this. Bank of America, Chevron, the energy move, all those recent tech moves, and then again today in Twitter. Identify the money, wait for a good point to follow the money, and then using the big picture of the market as well as a big picture of that stock itself, make that determination. Is this a day trade or a swing trade? Today, guys, no confirmation across the board. We got a pretty quiet, weak market. Technology is not all that strong. To me, Twitter was a lone wolf, and in lone wolves, I take my piece and I call it a wrap. So hopefully this helped, guys, and once again, just trying to drive home kind of these, simple things that when you take, the big picture into consideration, it's kind of like your compass for pointing you in the right direction. If the market is super strong, it's going to give you that confidence to hold. If the market's going to be, market's weak and quiet, and you don't have that around the clock, kind of around the board confirmation, that's going to give you the confidence to make it a day trade, take your piece, and call it a day. So on to the next trade, guys, and hopefully you guys found this helpful.